Hello friends, welcome to my channel. Today I will discuss my algorithm, the model that I designed in Python. It's very simple model, but it's a kind of decision making system that helps me a lot through some description whether we should go in, at what time we should go and buy something, maybe stock, crypto. It can apply to all kind of equities or stocks and cryptocurrency, forex. But we will see today two important variable of this model, that is trend direction and TD1. I call it TD1. So this is the trend direction and trend direction 1. And friends, this model predicts this closing price on daily basis. This is daily chart, and we can see trend direction. When the closing price is below the predicted value, then it's in the downtrend. This means that price is going below the regression line, and when price is above, closing price is above our predicted value, then it's in the uptrend. So we will see this. So we have trend direction when trend is in downtrend. So the closing price is marked with the yellow. Yeah, it is below the regression line. So when trend direction is up, so this means that closing price is above the regression line. It is not in this downtrend, but it can be up other way. I have draw wrongly. Yeah? It can be in the other way, opposite of this direction. It should be an uptrend. My mistake. So friends, you can see trend when we will take example of this downtrend on 17th of December when the closing price is 11,540 and the model predicted value was 12,054. So the difference is minus 514 between closing price and model price, and that is 514. Closing price predicted, and this one predicted value, and this is the original value. And when the stock is in the uptrend, we will take example of this uptrend. This means that closing price is above the predicted value. You can see 11,850 and predicted value 11,700, and the difference is in positive. You can see whenever difference is in negative, this means that stock is going down. So closing price is below the predicted value. And whenever difference is in positive, this means that price is going up from our predicted value. And when we should go and buy stock, at what point? Whenever this closing price and predicted value are close to each other. So this is the time we should look at and buy something. Like here you can see difference is 3, so it's very close to each other. Here it was also very close to each other. Okay, there is difference, sorry, difference is 72. Yeah, and here difference is too much, 300 minus, and next day it is in positive, then it came little bit more down, but the price is going up here. Next day you can see 5%. So we can buy when the distance between closing price and predicted buy price is very narrow, and we can do risk management. So the question is, if distance between these two prices is very narrow, small distance, and the next day again it can be in the minus, it can also happen next day. Here it's positive, maybe sometime I observed that minus, it went down closing price. So how we will manage this scenario? If I buy here, so this means that I will buy here maybe 2-3%, and then if it's in the uptrend started like here for 3-4-5, maybe it lasts for 1-2 weeks some minimum, so then I will buy average in uptrend. But when it's going down, I will just wait. If it's going down here in minus and the gap is like minus 300 here, so maybe I will wait, and when the next in the next round, when the price will come closer to each other, I will average at that. So that's how I use this model. So friend, this is another TD. TD1 is another layer on top of trend down. So TD1 helps me to know the price. When the price close above the previous, then it is in the uptrend. And when price closes below the previous, then it's the downtrend. You can see here, this is the closing price 12,500. This is larger than the previous, so it's uptrend here. Here it's uptrend, and 12,360 is below small than this previous value, so we have D down. So this day price was down. So it helps me a lot to know if signal is getting weaker. So we have D, trend is in the up, and we have some D's here. You can see it is in the uptrend, but we have D, price is close below the previous, price is close below the previous. So this signal helps me a lot to know that this uptrend is getting weaker and weaker. At some point it will go down in the downtrend. Here you can see relative strength index. It was 55, 52, 60. It was up on the uptrend. When both up, so it's very solid strength. It was D, with signal is getting weaker, and the next D you can see from 60 to 55. Relative strength index also fell down with D. So this helps me a lot, and these two parameter, that is how I use trend direction and trend direction 1. So this is the overall trend direction, and this is on the daily basis. If price close below the previous or above the previous, then we can get D with down and up with up on the second layer. So we will also discuss in the next video about how I use this relative strength and relative volume in my data analysis. I will make another video on these two, but this is very important part of this algorithm. Closing, predicted, and difference, this is the difference between two prices. That is how these four columns help me to analyze data. I will make another video on these two columns. So that is what we have for today, friends.